The American economy runs on gas. The more people spend at the pump, the less they spend on everything else, slowing the consumer-driven economy, making voters angry and politicians nervous. Prices have been falling, but they are still considered high. So as the U.S. heads into the summer driving season, President Barack Obama has decided to tap into the nation's strategic reserves, selling the largest amount in its history, 30 million barrels, an amount matched by other countries. The administration says it's to make up for the loss of Libyan oil. His critics say that's just an excuse, and this is not an emergency.
I don't think so. I mean, a political emergency for Obama? Perhaps. It's both political and a cynical move. The Obama administration is already in campaign mode for 2012, and they don't want Americans paying really high summer gas prices when the economy is already down.
I think it's pure politics, because if it was designed to be used in emergency, there were other points in his presidency that the price was higher and the emergency was higher. Saudi Arabia is already producing what Libya is leaving.
Very little Libyan oil comes to the U.S., but administration supporters say it does impact the world market, and that is an emergency of sorts.
SPR stands for Strategic Petroleum Reserve, but it also stands for sudden price reduction.
The market had a reaction to the sudden news. The price of crude dropped over $4 to just over $91 a barrel, the lowest it's been since February. Meaning Americans will pay less at the pump, but experts warn only for a little while.
Unless we see some complementary reforms addressing the role of speculators in the futures market, for example, we're not going to see a long-term impact on price reduction from this release of strategic petroleum supplies.
30 million barrels of oil is enough to meet U.S. consumption for about a day and a half, but the administration says it will consider selling more in the near future. Patty Culhane, Al Jazeera, Washington.